Mastering discipline. This topic is very underrated. Not enough people talk about this. Not enough people give this the respect it deserves. If you can master discipline, the sky is the limit in almost any aspect of your life. And it's not that hard to do. It's just a shift of perspective, of mindset. So why is discipline so important, especially in trading, compared to any different aspect or challenge in your life? Okay? There are always things that are going to happen that make you want to change something or not do something. Example, if you work out, some days you don't want to work out, so you lack that discipline. But if you continued to work out as planned, the results would be better than if you made changes and stopped working out. In trading, it's very easy to make changes to your strategy or do things that are not part of the plan or to not be disciplined. It's very easy. Guys, the market will give you reasons to change your rules. The market is trying to trick you by changing your rules, by not being disciplined. If you don't fall for the traps, and if you respect the market, and if you stick to the discipline, and if you follow the plan, and if you accept the losses without blaming anyone, the market will reward you. Okay? It puts you through those challenges and wants to see, can you make it through those challenges? Do you deserve it? The challenge is to not change your rules. Okay? A lot of people do. You find arguments in your head. People are very good at thinking themselves, talking to themselves into situations or to do something. So no more of that. Accept the losses if they were part of the plan. Discipline will get you what you want faster than if you try to take shortcuts. I tried, okay? Name me any indicator you know, I tried it. Name me any signal provider you know, I know them. I tried many of them. I did try the shortcuts. This is coming from first-hand experience. I've been through this myself. What worked is discipline. That's when things really changed. So we'll have a look now more detail as to how you can master discipline. Okay? And remember, discipline will get you what you want faster than if you take shortcuts. If your diet plan was a month, but you take so many breaks, so many breaks, and you go off the path, it ends up taking you 3 to 4 months. And even if you try to take shortcuts, it won't work out because you're not following the plan. You think you're allowed to make changes, more changes. So what should have been 1 month took you 3 or 4 months, or you just gave up. So let's have a look today. Why be disciplined? Many fail as traders because they break or change their rules too often. They believe the reason they are not successful yet is because there is a holy grail strategy that they can't find. When they lose money, they usually blame the strategy. There is not a holy grail strategy. There is a holy grail strategy. The holy grail strategy is mastering discipline, emotional control, and risk management. That's the holy grail. Done. That's the strategy. If you're talking to me about a technical holy grail strategy on the charts, like a special indicator, a special pattern, that's not how it works, okay? That's not how it works. Anything works. That's why I am someone that gives advice that could apply to almost anyone, because I tell you right now, almost any strategy works. I am not even worried when I share my strategy with you guys in those other videos. I'm not worried if somebody knows what I'm doing or if it stops working, because I know that trading is not technical. I can pick any other strategy, even if I just follow that strategy as it says, without bending the rules, I will make money. So the strategy is not the issue. because any strategy works. You need the discipline to make that strategy work. Okay? So if you blame the strategy, you think that's the problem, you're going to make changes. That is not disciplined. You have to accept the losses. You have to accept when you lose if it's part of the strategy. The market wants you to blame the strategy. The market wants you to break your rules. If you blame the strategy, you will change it. And if it doesn't work, you will change it again. Therefore, going through a cycle of giving money to the market all the time without learning anything, because trading isn't about technical analysis. Like I said in the previous slide, it's a trick. Breaking rules, not being disciplined is a trick. That's the trick. The market wants you to blame the strategy. You might lose, but you discover something very interesting, like, oh my gosh, but if I saw that, very interesting. The market just threw you a bone. You took that bone and then it got you on the leash. The market's dangling you on a leash. It's got you roped. If you think success on the charts is technical, the market's got you. You understand? The market wants you to break your rules. The market does reward the disciplined and the patient, the people that do not break the rules. The market wants you to change your strategy. The market wants you to break your rules, okay? The market wants you to react in a way after a loss that makes you want to make a change to what you've been doing previously. Okay? Why be disciplined? Because the market doesn't want you to be. So, here's some ways to help you master discipline, okay? An ambiguous trading plan, as mentioned in the previous video. The one about gamblers versus traders, okay? If you have an unambiguous trading plan, you can be more disciplined because your rules are going to be straightforward, right? The rules are not open to interpretation. The rules mean one thing. You cannot try to manipulate that rule or manipulate the chart to make it fit the rule. No, that's ambiguous. Our trading plan, our rules are straightforward. We do not think. We do not try to bend. We see or we don't see. You know, it's like we try to make a puzzle fit. We need the exact pieces for the whole puzzle to fit, the whole setup, in order for us to take the setup. Other people, they take that piece, they make the piece fit the puzzle, they take another piece of puzzle, they make it fit. Oh, I got my setup. So we do this to minimize distorting market information. Exactly. We don't want to manipulate what the market is saying to us by having straightforward rules. Minimize thinking. We don't want to think when we trade. Thinking brings doubt, brings emotions, okay? I don't think when I trade. I have not different thoughts. I have thinking to help me know when I'm making emotional or non-emotional decisions for awareness thinking. But you're not supposed to think when you're looking at your rules and the setup. There shouldn't be think. It should be like match, no match, match, no match. That's it. Just do. And an ambiguous trading plan helps us minimize emotions because we know we have to do what the plan says. Whatever happens in the market doesn't matter. We do what the plan says. How do you have an unambiguous trading plan? You might have a good plan, but you might not have the rules that you need to make sure you are disciplined. You need to have straightforward rules. So maybe rephrase your rules to make them straightforward, not ambiguous, not rules that you can manipulate when it's time to take a chart. And you backtest different things. It could be different time frames, different times, different pairs, anything, different days, different patterns, different stop loss size. Just backtest different things. And those criteria have to be straightforward criteria. Example for me on my strategy, on my trading plan, I am only allowed to look for the trend on the daily time frame and the 4-hour time frame. That is an unambiguous rule. It is not open for discussion or for debate. If I'm trying to figure out a direction, I cannot look at any other time frame. Only those two, straightforward. Even if it's not clear on those two, it's not clear. I move on. I don't go on to another time frame. That's like my rule about like directional bias. Very straightforward. Okay? Backtips different things to make them objective and unambiguous. And like again I said, have simple and straightforward rules. Understand, guys, that your trading plan is there to protect you, not to stop you from succeeding. If your trading plan tells you to exit a trade, it's got your back. You're probably angry, like, nah, you're trying to stop me from making money. You put that rule for a reason. And by the way, right, you put that rule in your trading plan. So the trading plan is there to protect you, not from succeeding. Maybe it told you to exit and you exited, but that trade was a winner. But guys, maybe once or twice, but on the other 3 to 4 times, more often than not, it would have been a loss if you don't exit. So understand your plan is there to protect you. So be on its side. Don't fight your plan. It's on your side. Okay, it's not there to stop you from succeeding. So be nicer towards your plan. Don't hate your plan. Just trust your plan, and then that's going to help you that's going to help you be more disciplined and not break your plan. The trading journal is good for discipline because it helps you take accountability of your actions. It makes it easier to understand what the issue was, and you're gonna make less often blame to the strategy or to the market or something else. You will understand more what it means to have a loss part of the plan. You will see how it works. You might have a loss, but then you'll get 2 or 3 wins in a row. Things like that. You will learn a lot from looking at the data of your trades, and you'll be more accountable, more responsible. So your decision making is going to be better next time you take a trade. You will be wiser. You will learn from your actions. It's the best way to learn. Building the trader's instinct. As you trade and you put the trade in your journal, you might put a screenshot, and then with time you're gonna know, like you're gonna have the instinct of knowing, of thinking less. You'll have an instinct that's gonna help you think less. It will help you do more. When next time like you see things and you saw it before, you won't think, you'll just do. So trading journal helps you with the trader's instincts in many ways. It helps you understand more easily why you win or lose a trade. You understand if the loss is part of the plan or not. Yes, you can improve your strategy with many losses. If you see a pattern in your losses, you have the proof. That's the way that you could make change to your strategies, because you have the proof that you see of why you might be losing or why you might be winning. You see patterns because you have many trades that show the same thing. And it helps you gather reliable data for actionable insight. Like again, you might know that after time you'll realize that live trading USD JPY actually doesn't work out like on a Tuesday. So you might improve your results by stop trading that pair on Tuesdays, because you'll get enough data to make real actionable changes. Okay? I hope this can help. Okay. How to choose your risk per trade. I'm going to tell you how to choose your risk per trade to minimize emotional interference in your decision making. I'm telling you how I choose my risk per trade to help me make objective, cold-hearted decisions on the chart, no matter the amount of money. Okay? I'm going to tell you what I do to choose your risk per trade. The risk per trade that you should use to make sound, rational decisions. Okay? This risk per trade, this test, each one is going to have different results. Because I did say risk management is very personal. It depends on you. So this is a personal test. Look what you're going to do. It's called the heartbeat test. I forgot what I saw it. Probably, I think it was an institutional trader interview. I think I saw it there. The heartbeat test is when you enter a trade, you're in a trade and your heartbeat starts moving faster than usual. that means the size of your position is too big. Okay? So what you're going to do, you would figure out what risk, what amount, what position size lets you go in the market without that accelerated heartbeat, that rush. So you're going to minimize the position size until you don't get that rush. You find your soft spot. That makes you disconnect with the trade and disconnect with the outcome of the trade emotionally. That's going to help you so much. If you went through in a trade and you already start getting like this adrenaline, like excitement or something, we don't want that at all. If you saw my previous video, we need to ignore the rush. So here's a way, guys, to know what should be your risk per trade. You will enter a position size, and if you feel like your heart is going too fast, position size is too big. You're too emotional and in the decision making, and in the outcome of the trade, you will be too attached to the outcome of the trade. So just get into a position that where you feel it doesn't affect you. Okay, we don't want to be affected. We don't care if we win a trade or lose a trade. We look at results on a weekly basis. So another way for you to not be associated with the outcome of the trade. Okay, that's an interesting test that will really help you choose the right size for your risk per trade to make the right decisions before you enter a trade. You'll be comfortable because you know you'll be comfortable in the position. So your decision making to pick the setup, identify the setup will be better. The management of the position will be better, and you will deal better with the outcome of the trade. And if you won that trade, you'll be excited, but it won't affect your next trade because we already have a good risk per trade. We have a good risk management strategy. Guys, don't try to recover losses, okay? Example, I had like 5 losses in a row. And obviously the plan, my initial instinct was that I need to make that back, to make this back and stuff. But no, right away I stopped that thought. Right away I told myself, no. You just need to get back on good execution. Make sure those trades were part of the loss. You don't care what happens. You don't care about recovering. You know you have a plan, a great plan. You just make sure you get back on that horse and your execution is top notch. That's the attitude. I don't try to recover losses. I maybe try to recover my mojo. So you try to recover. Don't try. Yeah. So what I did, I wasn't trying to recover the losses. No problem. I just made sure that the next trades that I take were all excellent execution, no mistakes. And that next week was a positive week. I didn't fully make up the 5 losses, but I was very close to doing it. Guys, the following week, I had like 3.7 R. I blew that 5L out of the water. Like that 5 L's in a row didn't even matter. Okay? Do not try to time the recovery of the losses. Do not try to control. Do not try to recover the losses. Okay? If you're in drawdown, it happens. Look at it as a test. In the first episode, episode 2 of the prop firm challenge, I showed you how I got out of drawdown. I started the challenge in drawdown. You just drop the risk, and your goal is not to hit to take profit. Your goal is to get out of drawdown without having a time deadline on it. And I did that. So I got out of drawdown. You can do it too. But you don't think you have to have the right mindset. Don't try to revenge or catch up. Okay? Just gotta do what you gotta do. Accept mistakes, guys, okay? Yeah, again, let me just say something quickly about don't try to recover losses. Just trade your plan and make sure you don't take impulsive trades. If you accept the loss and you don't try to recover it, the market can't trick you this way because you aren't emotional or looking for revenge. It also works the same way for wins, okay? If the win is part of the plan and the risk is a conservative, like we mentioned earlier, and I am not emotional, I am not affected about the next trade. I I am not looking also for confidence as a reason to keep taking trades. I said this again, I just wanted to show you both sides. It's not only about the losing streaks, it's also about the winning streak. Okay? I just had August, the whole month of August, I had maybe over 25 trades or something, maybe 20 trades. I only had 3 losses in the whole month. This August. Today we're August 30th. Birthday soon in a couple of days. So what happened is, guys, I stopped trading. Not a lot of people are going to understand this. They're going to say what's wrong with you. I stopped trading. It goes both ways, by the way. You have a bad losing streak, you got to take a break. You have good winning streaks, you got to take a break. I have to make sure I stay sharp and not give anything back. I took a week off right now because August was crazy. I had 3 positive weeks back to back to back, and I decided to take a break. So if you also have good winning streaks, remember that things work both ways, and I'm not using confidence as a reason to keep going. I hope you understand what I mean when I say don't try to recover losses and don't try I'm trying to give you the opposite example. Okay, accept mistakes, guys, okay? I am here to tell you to not hate yourself if you make a mistake. First of all, we learn from our mistakes. That's how we learn. It's strange, but I enjoy mistakes because that's when I learn. I don't make a lot of mistakes. It's unfortunate. I wish I did more so I can learn more. Because you learn best from your mistakes. But the point is, accept mistakes because everyone makes mistakes. I'm telling you, the best of traders make mistakes. The difference is the difference between a good and a bad trader is that we bounce back faster than the bad trader. We realize faster when our emotions are taking control of our decision making. So if I enjoy mistakes, I will accept them, no problem. But let's see from somebody else's point of view what I can say. When accepting mistakes means that everyone does them. It doesn't mean you're bad. It means it's an opportunity to learn, and it means that if you take it the right way, it's all about attitude, right? Your attitude when you have a mistake, how you react to that mistake, right? Angry, you hate yourself, or no, it's okay. Anyone does this. It's about bouncing back. It's not about making a mistake. It's about bouncing back. So if you make a mistake, don't worry. We all make mistakes. Accept it. I am telling you how to master discipline. Okay? To master discipline is to be at peace with mistakes. We accept mistakes. We all make mistakes, okay? Difference to if we bounce back fast, okay? And I gave you my perspective on mistakes. It's an opportunity to learn something new. A lot of people take it bad when you tell them something like you're attacking their ego, but actually you're trying to help them. It's the same thing when they make a mistake, they take it so wrong. Accept mistakes because it's a good thing. So we're trying to help. So have that attitude of learning, of not seeing it as a bad thing, not take it as a personal attack on you. No ego involved when you make a mistake. If you make a mistake, try to be like, thank you for this opportunity to be better. Next time you have a mistake. It's all about fucking attitude. Remember that. Guys, the last slide, okay? It's kind of a long video, but it's a very important topic. Like, it's crazy. Okay. Awareness. Remember, the tricks are to make you emotional and break your trading plan. Find ways to practice self-awareness that work for you. Find ways, look it up, ways, self-awareness, practice ways. There's easy ways, but it could be anything. It could be, if you're going on a jog, it can help you with self-awareness. It could be small things, look it up. But self-awareness, someone who is aware is a dangerous person, is a very sharp person, because they are hard to trick. They are aware of what's going on. Know the tricks. They know what the tricks are. Remember, the tricks are to make you emotional and break your trading plan. So if you know the trick, you can master discipline, okay? I'm telling you guys, the mindset, okay? It's different. Don't think it's hard. It's just a mindset shift. Remember the tricks, okay? Look through all my videos. Look at the patterns in my videos. There's many things I mention again and again. People think there's no. People don't. Some people maybe not even realize the gems that I'm providing in these videos. Like, it's crazy. Okay? Remember, the tricks are to make you emotional. The market wants you to be emotional. Remember in the previous video what those emotions are. Okay? And the market wants you to break your trading plan, okay? So if you lose and you don't break your trading plan, but you lost, but you didn't break your trading plan, guys, that is a fucking win. That is a big win. The market is scared. The market is scared because it will have to reward you. It can't get to you, bro. Can't get to you. Can't if you have that awareness, that sharpness, bro. Like Luka Modric, if you know football. Look at his awareness. Find out how does he practice self-awareness. He doesn't make emotional decisions on the pitch. He knows where everyone is on the pitch like the back of his eyes. If you don't know him, I apologize for that example. So find ways to practice it that work for you. Something suitable for you. It's not a one-trick pony. Simplicity. Don't overanalyze, and keep your trading rules easy to follow. Simplicity, guys. Simplicity, guys. Like, people think there's a holy grail. They think it's very complicated. Guys, the smartest people are the most amazing trading analyzers, but they are horrible traders. They cannot be traders. They're just these analysts at these banks. They give advice, or they just analyze data, but they cannot trade. They don't have emotional EQ. It's EQ, not IQ. You don't have to be smart. Simple. Everyone's trying to complicate it. Why don't you keep it simple? Don't overanalyze. Keep your trading rules easy to follow. Don't overanalyze, okay? Don't overanalyze the setup. Don't think. Don't overanalyze your results. Like trade, remember about the long run. You want to look at your results on a weekly basis. Your goal is to be consistent, not to make money. Your goal is to be disciplined. Those are your goals, okay? Discipline, huh? Up top on your right, stick to your rules. Discipline, stick to your rules. That's the goal, guys. That's how you win. That's how you win, guys, in anything. This is so random, but if you know his name, Michael Phelps, that swimmer, they asked him. I saw this on Instagram this morning. They asked him, what's the reason you were able to accomplish what you did? He said that every day for 4 to 5 years, this is crazy, every day, 4 to 5 years, without missing one single day. This is Michael Phelps, okay? This is an Olympic world champion and stuff, okay? And it's his passion. Every day he's in the water swimming for 5 years. Every day. He says no matter what, sick, sad, happy, angry, he does it. And then he turned into a beast mode. He said discipline is what got me where I am. He did it every day, 4 to 5 years, and look what happened. Now he can do anything he wants for life. Okay? Stick to your rules. Discipline. Your plan, your workout is following the plan. That's a workout enough. Following your rules is your workout. Stick to your rules. No matter what. The market will fucking reward you. You have no idea. You have no idea. Just try it. Just try it. Balance, guys, okay? Regularly clear your mind from trading to stay fresh and sharp for peak performance. This is very important. Every time I take a break, I bounce. I have a good week, guys. Because I'm so sharp. That week, I don't backtest. I don't think about trading or something. Maybe I would watch a couple of videos, a couple one or two per day, barely, or maybe not even. I'll just take a break, stay free. That way I come back and I'm fresh. I know the things that really matter, and I'm not angry about anything related to the trading. I'm very fresh. And if you stay on the charts too long, you start getting hypnotized. You become more easily manipulated. You become more tired. This applies to anything in life, right? You need a break from something to come back to it more refreshed, more better. You work hard, you need a break, so you come back more refreshed. So don't take it as a bad thing if you take a break from trading. You come back better. If you're tired, you might perform bad anyway. So regularly clearing your mind is great. I love trading, but obviously trading is a means to an end, is to help us uh, uh, be explore other things in life. Don't clear your mind from trading. Don't always think about trading, okay? This was a long one, guys. This is a psychology video, okay? A very important one, a very underrated one. Most information here is going to go over people's heads, which is too bad. And I don't even know how long I'm going to keep these videos on YouTube for. We'll see. But to the ones who understood what I'm saying, good luck. Good things are coming for you. And again, have a great day.